want to bring in Leslie Picker right now. She's with the CEO of the Carlyle Group, Harvey Schwartz. Leslie, good morning.
Hey, good morning, Becky. Thank you. And Harvey, thank you for joining us today.
Great to be here.
We are here at Carlyle because today you are hosting a shareholder update. You just bolstered your targets for a variety of metrics, fee-related earnings, distributable earnings per share, and inflows up to 2028. They're each higher than consensus. They're each higher than they've been over the last few years. And I want to know, in this current environment, given that outlook, it's something uniquely Carlyle, do you think, given just the backdrop and all the consternation that's out there about private markets right now?
No, I mean, look, we've been on a journey for the past 3 years, Leslie, where we really systematically, to some degree, overhauled the whole firm. And we went through a process. I could break it down and distill it in sort of 3 guiding principles. We really took a look at what the strategic growth initiatives should be. We took a really hard look at the operating model. We made changes to the compensation strategy. We made changes to how we allocate capital, how we return capital to shareholders. And then we made a lot of leadership changes. And the leadership changes were really fundamental to mobilizing the entire firm. And if you look over the past 3 years, there's been really dramatic growth. And we really felt this was the important inflection point for exactly the reasons you're talking about, to say, listen, this is what we think we can achieve over the next 3 years. And the way we did that is just first principles, bottoms up build. We looked at the strength of the franchise, the geographic diversification we have, industries that we're involved with, the breadth of the brand. What do we think we can do over the next 3 years with the capital and the client base that we have? And I would say it's a reasonably conservative model. There's nothing inorganic about it. There's no big strategic execution involved. There's no upside surprises. So I'd say it's a pretty conservative basic model for what we think we can do in the next 3 years. We feel good about it.
And as I hinted at, of course, there's been a lot of volatility among alt managers lately. Carlyle is the best performer of the group, but it is still down 12% month to date. There are so many headlines surrounding software exposure, which I know is only 6% for Carlyle, around retail products, around the capital markets. What do you make of all of this market sentiment for the industry right now?
Well, we don't over-respond too much to the day-to-day sentiment. You know, at the firm, we have 2,500 people. We get our best data from our portfolio companies. So we have north of 700,000 employees in our portfolio companies, spanning government services, industrials, healthcare, financial services. And I would this could be a very long conversation, by the way, but I would break it down into really 2 fundamental pieces. The first is, what does that data tell us? We look at that data, you know, the economy feels good. We think GDP for the first quarter, based on what we see, could be well north of 3%, maybe even 4%. Policy is very friendly in terms of favorable financial conditions. And so that all feels very good to us. The atmosphere around that, this is a market that's very sensitive to information flows. And so if we get a bad GDP print or an inflation print that concerns people, people are really on the edge. And there's a reason for that. You know, the pluses and minuses of AI and what does it mean? Also what's happening geopolitically in the world with the buildup of military activity in the Middle East. So there's a lot of questions out there, but we really try to stay focused on the core economic opportunity because we're committing capital for a long period of time. Specifically as it relates to SaaS, I would say that that conversation, I think, is being a bit oversimplified. As you said, it's not been the core focus of our firm. But what I would say about it is that this will be a story that will unfold over a period of time and very, very difficult to draw very hard conclusions. But I would say that, again, it's a very new, sensitive world right now.
Yeah, and it makes sense that, you know, you would distinguish kind of what's going on the portfolio level from a fundamental standpoint, whether it's default rates or valuations and so forth.
North Star.
But does the sentiment impact flows at all? Because that's, of course, what fundamentally matters for your company.
On any given day. But I would say that what really, again, sentiment on day-to-day is certainly important. But it's not what drives the strategy of the firm. When you think about the long history, going back to 1987 in terms of the foundation, when the founders really pioneered private capital, you really have to ask yourself, what is the structure of capital needs around the world and what drives that? So I have the privilege of going all over the world, and I can tell you that uniformly everywhere I go, the demand for capital is going up, all forms, bank capital, private capital, because everyone is focused on economic growth and reindustrialization, investing in national security. These are things that we've been doing for 40 years. And so I think it's more about the demand for capital than it is about the sentiment on any given day. And there's we went through a period of globalization. That was a period of geopolitical splintering, if you will. And what that's created is a global competition for capital. And capital is what helps economies grow. And it's been difficult for governments to do this with deficit levels where it is. And so private capital will be enormously important going forward.
All right, Harvey, we really appreciate you joining us. Obviously, a very important subject that we're acutely focused on here at CNBC with the alt managers, and look forward to hearing more from your shareholder update.
Really appreciate you being here. Thanks so much.
Thank you. Harvey Schwartz, CEO of Carlyle. Becky, I'll send it back to you.